Thanks indeed for getting us that latest update. All right, L&T Finance Holdings is looking to improve their return on equity to 18 to 19% by 2020. They're looking to sell 3,000 crores of their defocused assets. Dinanath Dubanshi, Managing Director of the company, now joins in to take some questions. So thank you very much. There has been a change in strategy, sir. We have shifted focus towards higher and more profitable business, rural financing, housing finance and wholesale financing. Could you provide us some guidance on loan growth in these segments going ahead?
This strategy is fairly recent. If you have been following our company from FY11, since the time we listed, we had the ambition of becoming a bank, and with that ambition, we were in many businesses. As a result, actually, in many of those businesses, we were not distinctive. We were not among the leaders, which led to having low profitability in many of those businesses. And hence, what we decided somewhere in the beginning of this calendar year is that we will be in businesses in which we can be distinctive, in which we can have leadership positions, we can be better than others, whether the cycle is going up or cycle is going down. We will grow in these businesses. We will develop very serious strengths in these businesses. Now, when you do that, obviously you can't do in too many businesses, and hence using criteria like industry attractiveness, our right to win, and our ability to make profits across the cycle, we chose these three businesses. As you rightly said, wholesale, including infrastructure, housing, and rural. We believe that these are industries where we either already have a right to win or have a very clear sight as how to develop right to win. Rest of the businesses we will be exiting. In fact, we already stopped doing all those businesses. This strategy, I am sure, will not only lead to profitability, but to growth and to excellent growth in our chosen businesses.
Okay. Sir, the company has an intention to sell down their defocused business, which could be worth around 3,000 to 4,000 crores, we understand. We also understand you've already hired investment bankers for selling down the book. How much is expected to be sold by FY17, and by when will it be completed?
This is a defocused portfolio. We are not adding a single rupee to this portfolio. We are not doing any business in this portfolio from 1st of April. And as a result of which, every month this portfolio is running down. It's a good portfolio. As it gets built, it keeps running down. So this 4,400 crores is already, as we speak, about 3,000 crore odd. We have, as you rightly said, we have already hired investment banker. We are at a very advanced stage of the process. We have also started getting some quotes for the portfolio. At this point of time, being in the middle of the process, I would not like to make any comments about when exactly we look forward to selling it. But directionally, certainly in this financial year, we should be able to sell a large part of that portfolio.
So the market would, of course, like to know what kind of return on equity would you make, or at least the trajectory broadly going ahead.
See, without the sell down of the portfolio, question doesn't arise. I mean, we will certainly be selling this down. We have very clearly stated our goal. The strategy actually revolves around delivering top quartile ROE by the year 2020. What does top quartile mean? In today's terms, under the BFSI sector, top quartile means around 18 to 19%. From today's 10%, I mean, by last year we were at about 9-point-odd%. In first quarter also, we were very close to 10%. From there, we will be steadily increasing to 18% odd by 2020. We have a very clear strategy to achieve that. The strategy is around doing the right businesses, which we have talked about, having a very simple structure to achieve it so that it's easy to understand, and most importantly, having the right people to deliver this strategy. We believe that using this strategy, the growth in ROE will be quite steady year on year as we grow. We don't give yearly targets on ROE, but suffice to say that a steady growth from this 10% to around 18% will be achieved. we have taken this task, and this strategy is being implemented in 3 stages. First stage is the cost optimization stage, which we already completed. Our cost to income ratios are substantially down there from last year. Second stage is what we are doing currently, is selling down the non-core portfolio, which is a drag on the ROE delivered by our core businesses. And the third and the most important stage, which we should not forget, because no company grows by cost cutting. Profitability never goes by cost cutting. Cost cutting prepares you for the growth, but the growth is going to come by profitable growth in our core businesses. So delivering our strategy in all these 3 aspects, which is cost cuts or cost optimization, cutting of non-core portfolio, and most importantly, profitable growth in our core businesses, is how L&T Finance Holdings will deliver the 18% ROE by 2020.
Okay, 18% ROE by 2020. Sir, just an update on Bain Capital. How much capital are you getting in from Bain? If you can just update us on the same.
Now, Bain Capital is not coming in or has not come in for a particular book. Bain Capital has taken up stake in the entire L&T Finance Holdings. Right? It is in 2 stages. A year back, Bain Capital bought 5% from our parent L&T and also invested warrants. And they have already invested about 300-350 crore odd as subscription to warrants. And as we convert warrants, equal amount of capital, Bain will be infusing in the company. So at the end of the whole process, Bain Capital will own around 10% and L&T shareholding will be around 65%. This should happen somewhere around the first quarter of next financial year.
Okay, fair enough. We're going to leave it on that note, sir. Thanks very much for joining in and speaking to us. So that's L&T Finance Holdings. But the other stock which should come up for you is Alembic Pharma. It's a little bit of a shot in the arm that they've received an EIR, an Establishment Inspection Report, from the US FDA.